Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin ETFs face historic bleeding while macro tensions push crypto into extreme fear territory. Bitcoin currently sits at $66,187, Ethereum at $1,914, and Solana at $80. Bitcoin exchange-traded funds experienced their longest outflow streak in over a year, with nearly $3.8 billion withdrawn over 5 weeks. BlackRock's IBIT led the exodus, losing $2.13 billion during the period. Last week alone saw $316 million leave these funds. This comes as institutional wariness persists following last October's crash. Market volatility intensified dramatically over the weekend as Bitcoin dropped over 5% from 67,600 to 64,270 during Asian hours before rebounding. The sell-off triggered approximately $500 million in total crypto liquidations, with long positions accounting for $434 million. A single $61 million leveraged Bitcoin position was forcibly closed on HTX, marking the largest individual liquidation in 24 hours. The Fear and Greed Index collapsed to just 5 out of 100, a level of extreme fear matched only 3 times since 2018. President Trump's announcement of 15% global tariffs sparked the risk-off sentiment that hammered cryptocurrencies alongside traditional markets. The tariff push followed a Supreme Court ruling that previous trade measures overstepped executive authority. Bitcoin long liquidations surged 934% in 24 hours. On-chain data reveals troubling whale behavior. Bitcoin balances on Binance hit 676,000 BTC, the highest since November 2024, representing a 9.3% increase from recent lows. Rising exchange balances typically signal bearish intent as whales position to sell. One whale transferred $760 million in Bitcoin to Binance on Sunday, following a $500 million Ethereum transfer days earlier. Crypto quant data shows the exchange whale ratio climbed to 0.64, the highest since 2015, meaning nearly 2/3 of Bitcoin deposits come from just the 10 largest daily depositors. Despite the carnage, commitment of traders' data suggests smart money is moving net long. Technical analyst Tom McClellan highlighted that non-commercial futures traders are building long positions at levels historically associated with significant market moves. Stablecoin liquidity contracted by over $3 billion in 60 days. However, accumulation signals are emerging as holders with less than 1 Bitcoin continue steadily increasing their share of circulating supply. Regulatory pressure added to market woes. Austria's Financial Market Authority prohibited KuCoin EU from onboarding new customers, citing critical staffing shortfalls in anti-money laundering and sanctions compliance positions. The next critical period hinges on whether Bitcoin stabilizes above the 62,000 to 64,000 range. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.